Health reimbursement arrangements, or HRAs, are a great health benefit that allow you to get tax-free reimbursements on individual health insurance premiums and qualifying medical expenses. The best part is, you're not the only one who can benefit from your HRA. Many of your family members can too. Though family members don't receive their own monthly allowance amount, they can submit their personal expenses for reimbursement through your allowance. In this video, we'll go over how you can get tax-free reimbursements for expenses for your spouse, children, and other tax dependents through your HRA. First, let's talk about spouses. If your spouse incurs qualifying expenses, you can get them reimbursed just like you would for your own expenses. However, in order to get reimbursed for a spouse's expenses, the IRS requires that you and your spouse are legally married at the federal level. An HRA is a tax advantage benefit that's regulated at the federal level. So domestic partnerships, common law marriages, or marriages that are only recognized at the state level don't meet the requirements to allow for expenses to be reimbursed. It's also important to note that spouses are entitled to the same tax advantages as employees. As long as your spouse has minimum essential coverage, they can receive all reimbursements tax-free. In addition, if a spouse is enrolled in their employer's group plan, premiums paid toward that plan can also be reimbursed through your HRA. However, this reimbursement will be taxable because your spouse is likely already making a payroll deduction on a pre-tax basis. Next, let's talk about reimbursements for your children. Your children include your son or daughter, including stepchildren, foster children, and legally adopted children. In order to get reimbursements for your children's qualified expenses, they must be under the age of 19, or if they're a full-time student, under the age of 24 at the end of the previous year and younger than you. However, there are no age restrictions if your child is disabled. Your children must also have lived with you for more than half of the year, they must not provide over half of their own support for the year, and they must not file a joint return other than to claim a refund. If your child is over 18 years old, they must have earned no more than $4,200 in gross income in the previous year and have not filed a joint return in the previous year in order to receive reimbursements. Finally, let's go over your other dependents who aren't your children. You may have someone in your household who isn't your child, but is a dependent that you want to get expenses reimbursed for. This person can't be a qualifying child of any other taxpayer that year, and you must provide over half of this dependent support to at least one of their family members. This could include parents, in-laws, grandparents, siblings, aunts or uncles, or any other person other than your spouse who lived with you all year as a member of your household. With an HRA, your reimbursement benefit allows you to be reimbursed for expenses that you, your spouse, your children, and other tax dependents incur throughout the year, making for a unique and flexible benefit that works for a variety of family situations. At PeopleKeep, our award-winning customer support team helps thousands of organizations administer their own HRA every day, and we love to help you too. Tap below to subscribe and get more health benefits updates like this. If you're interested in HRA for your organization, visit PeopleKeep.com to learn how we can help you get started.